Good morning, everyone, and welcome to another NAFA Town Hall, and it's also good afternoon for some of you as of a couple seconds ago. I want to welcome all of you to another one of our Town Hall series that started, well, just about 45 days ago when the new normal came upon all of us. And with that, I'd like to, first of all, wish all of you on behalf of the NAFA executive team and the NAFA Board of Trustees, we hope that all of you are hanging in there. That you're safe, you're sound, and you're healthy, and know that you are in our thoughts and prayers. And let's just keep our heads up and keep swimming hard, even though it may be a little upstream right now. As I mentioned, my name is Tom Michael. I'm the president-elect, and I'm happy to be joined by our executive committee that has been hosting these webinars for the last 45 days. I think, as most of you know, the world is changing pretty quickly, even though we've been staring at the same walls for about 2 months. If I was to tell you on February 12th, while you were out ordering flowers, that the Dow Jones was at 29,551, and in the next 65 days, we would have positive and negative swings of 20 and 30% in the market. We'd stand in line for toilet paper. Unemployment claims would exceed 16 million, even though unemployment was at an all-time low. And NAFA would then be hosting a webinar on various stimulus packages. I think you would all finally get me committed like you wanted me to. But that's where we are. And today we have one of the brightest minds in Washington, D.C. to share his insights on the Paycheck Protection Program, which in and of itself has taken a topsy-turvy turn, as you probably know, in the last 16 hours when it was announced that there's no MOS. But before we go there, just a couple of brief moments from your sponsor, man who's leading us through choppy waters, one of the best in the industry, our CEO, Mr. Kevin Mayhew. Kevin?
Good morning, Tom, and good morning, everybody else. Thank you very much for joining us today for the town hall. I'm going to be really brief because we want to get to what Scott has to say. But I would like to, again, thank all of our NAFA members that joined, and also all of our friends and colleagues from MDRT, WIFS, NIA, LIA, Life Happens, NAILBA, LIMRA, the American College, and FSP. We're glad that you're here today to join us for this NAFA Town Hall. Two things I want to mention very briefly before we get into Scott. One is to let you know that, again, in times like this, a professional association is there for its members to take care of them. NAFA started many years ago a relief fund to help out primarily folks that were hurt by natural disasters in the United States, hurricanes and whatnot. And now we have retasked that fund to be available for NAFA members that are actually impacted by COVID-19. And so if you're a NAFA member and you'd like to contribute to this fund, or if you're a NAFA member who's been impacted by COVID-19, and by that we mean by medical expenses and things like that, not for lost revenue, you may be eligible to apply for a grant for the NAFA Relief Fund. More will be coming out on that, but I wanted to flag that for you as NAFA members as another way that we've got your back. In addition, as you know, that the Congressional Conference, the largest legislative fly-in in the entire industry, that had to be postponed because of what's going on right now. But what we've done is we have retasked that week to be NAFA Nation Impact Week. And so all of our friends and colleagues, every financial security professional, you're welcome to join us free of charge that week. On Tuesday, May 19th, we have a diversity symposium. It's going to be a great opportunity to talk about how we make this industry more diverse and how you serve diverse markets. On Wednesday, May 20th, we're going to get into advocacy and action, where we're going to hear updates from presenters such as our government relations team and our lobbyists, such as Scott Sender and the rest of the folks that work with us as contractors, as well as members of Congress, to talk about what's going on in DC and how you can have an impact. And then on Thursday, May 21st, we've got Leadership Day, where we're going to give tips and tricks and training so you can be a more impactful leader in today's COVID environment. So stay tuned. Go onto the NAFA website, belong.nafa.org. Check out the information on Impact Week. We hope you'll consider signing up and join us for that week. Again, it's free of charge, and it's a great way for you to get engaged and for you to continue to advance your career. Tom, back to you.
Thanks, Kevin. And again, thanks for all you do and the NAFA staff. We really appreciate it. Let's get right to the meat and potatoes of what we're doing today. NAFA is very lucky to engage outside counsel along with the unbelievable leadership we have in our government relations team inside that I'll talk about at the end of this. But one of them is a gentleman by the name of Scott Sender, who has now worked with NAFA for over 20 years, and he's currently with the highly respected law firm of Steptoe and Johnson. In 20 years, you can only imagine that he's been through some pretty challenging times with NAIFA in his over 30-year career that he has had in the field of law after he received his JD from the University of Michigan Law School, where he also did his undergrad work. Scott is one of the most highly respected litigators and legislative advocates on Capitol Hill. We're lucky to have him on our team. I've been fortunate to have many sidebars with him, and his intellect is bar none. Scott, if you don't mind, I'm just going to ask you a quick question, because we seem to be getting a lot of these that lighten up our tote board, if you will. The question we seem to be getting repeatedly is something to the effect that if I've already applied, or I'm in the process of applying, or I'm putting my paperwork together, and now I see the money's run out, I'm worried I'm not going to get any of this. Can you start with a little bit of a discussion on the availability of these funds as you get into your talk today? And thank you again for joining us.
Thanks, Tom. It's great to be with you all, and we're the lucky ones. It's been a really an honor and a privilege for us to be able to work with NAIFA and to continue to work with you. It's terrific. In terms of the money, so there's two issues. One is the program is out of money. The Treasury Department has announced that, and the White House reiterated it today. There are active efforts on the Hill to extend the program and to add more money to it. We expect those to be successful, and we expect for the machine to restart as soon as Friday or perhaps Monday or Tuesday at the latest. If you've already applied and the bank has submitted your application through the SBA portal, we think that it's in queue and that they've allocated money for that, but it's unclear. But once they kind of reauthorize the additional money, at a minimum, you'll be first in line for that. So we think that, we're going to continue to encourage people to get their applications in and to get ready so that you can be ready for the program. I'm going to now kind of move to the nuts and bolts of the loan program with two caveats. So first of all, the outline of the presentation is we're going to go through the nuts and bolts, and then I'm going to talk to you briefly about the tax alternatives to the program that are also available to you, but not if you are participating in the program. So it's a choice. The second is you may have questions at the end. We intend to do a second session so that we can curate the questions and respond in more of an organized fashion to them. But I think and hope that between the presentation and the materials we prepared, it's a simple overview of the program, that'll capture 80 to 90% of the questions. But some of the questions are not answerable yet because the forgiveness rules have not yet been issued. The SBA has until April 26th, which I note is a Sunday, so it's kind of a funny deadline to issue those. And we will also do another update webinar immediately after they're issued to give you the full details on that. So with that, let's move to the program. So this is kind of a basic outline of what you're signing up for if you apply. The magic of the program is really that bottom left-hand corner, that if you apply, receive the loan, and do everything you're supposed to do over the 8 weeks after you get the loan, then the loan is fully forgiven, meaning you don't have to repay it, and it's not part of your taxable income. So it really is almost like a grant program if you do it properly. So the program, the magic is in the loan forgiveness, and that is because the loans are 100% guaranteed by the federal government, so there's no bank risk in issuing the loan. All they are required to do is to verify that you have answered all the information required on the application, and I'll step through the details of that near the end. They do not have to verify that it's true or correct. That is on you. If you don't get full forgiveness, the loan has a 2-year maturity from the date of issue with a 6-month deferment, so no payments the first 6 months. You'll then have 18 months to pay, and the overall interest rate is 1%. There's no recourse against any individual owner. It's just a business loan, and there's no personal liability at all, which is different than most SBA programs. Zach, let's go to the third slide. So who's eligible? Small business concerns. And for our universe, we're going to be under the 500 employee cap. And so any of your businesses that are 500 employees or less, which I think is almost all of your businesses, will qualify. And let's move to the next slide and talk about the application. So ineligible entities, none of you are ineligible. You're the agents, not the life insurance companies, and so you should all be eligible for participation in the program. All right, let's go to the determining employer size on the next slide. So the general rules is that the employee count is based on an average per pay period either over the last 12 months or in 2019. And for you, that is going to be the period because none of you are seasonal employees. You do have a choice on whether you use the last 12 months or 2019 according to recently issued rules by the DOL. In making your count of who counts, each full-time person, part-time person, and other basis employees. So if you have 1099 employees, for example, or individuals who work with your firm, they all count in your count, each on a full basis, 1-to-1. There's also affiliation rules. I do not think these will apply to most of you, but if you're part of a family of companies where there's over 50% equity ownership that lapses over multiple of the companies, or there's common management through a CEO board or similar arrangement, then you're considered affiliates. And you'll also have to list all the affiliates employees on your, there's a place on the form to do that with an attachment. This determines your eligibility for the program. There are special counting and affiliation waivers for some businesses, but these really apply to restaurants, hotels, franchises. There is a State Farm issue here that we are trying to work with NAIFA through. But other than that, these exceptions should not impact your businesses. Let's move to slide 6, please. The next slide. The application process. So it's a 2-page application. It's pretty straightforward. There's basic information that's on it, including things like your employee identification number. You have to list all owners of the applicant who have more than a 20% stake. There's an attachment that you have to provide for the affiliates. If you received an emergency disaster loan this year, you also have to list that. And you have to make certifications about the applicants and anyone who owns 20% or more of the entity's criminal history. Basically, you have to have none recently. And all of these have to be attested to with a good faith certification by a single business representative of the company. Let's go ahead and move to the next slide, please. In order to be eligible, you had to be in business on February 15th, and you had to have paid workers at that time. You have to certify that the loan is needed to support ongoing operations during the emergency. You have to certify that you intend to use the funds to retain workers and maintain payroll. And the or really needs to be an and. You can exclusively cover the payroll, or you can use 75% of the loan proceeds to cover payroll, and the rest can be on mortgages, the interest, not the principal, lease obligations, and utility payments. You're going to need to submit payroll documentation to support your full-time equivalent employees. So that would include full-time people, and then you'd add up your part-time people to get the FTE number. After you receive the loan, to show how the dollars were spent during the 8-week period following loan origination to establish the forgiveness amount. This is where we expect more detail from the SBA by the 26th that we will dive into in a much more serious way later. The loan forgiveness will be the sum of the documented payroll costs and then covered rent, mortgage payments, and covered utilities, but not more than 25% of the amount that's forgiven can be for non-payroll costs. You will not be able to receive another PPL loan between now and the end of this year. We expect if the program is extended, so not just added to money now, but if they make it longer because the crisis lasts longer than any of us hope or expect, that they will do that by expanding your loans and not giving you new ones. You have to make a general representation that all information is true and correct, and you are going to be subject to the penalties of perjury under federal law for knowingly making false statements. And then the lender will calculate the eligible loan amount based on the documents that you submit. So let's talk about that eligible loan amount on the next slide, please. You're a good switcher of the slides, Zach, by the way. Maximum loan amount. So really it's on the right. That's the key metric. It's 250% of your average monthly payroll costs during either the last 12 months or 2019. Those payroll costs are capped at $100,000 on an annual basis per person. So anybody making more than that, when you're making this payroll calculation, you would reduce them to $100,000. The maximum amount of the loan for which any business is qualified under the program is $10 million. Let's go to the next slide, please. So this is really, in some respects, the key slide in the whole presentation. So we're going to spend a few more minutes here. And I'm going to start in the middle with payroll costs. Payroll costs determines how much loan you're eligible for. It's the bulk of what you can spend the money on, and it's also the bulk of what you will use to qualify for full forgiveness. So this is obviously really the key number in the entire program, and so it's worth paying some attention to. It's meant to be a fairly all-inclusive number of money paid to or on behalf of each employee. And I should note, in guidance that was issued just 2 days ago, the SBA clarified, and this is a departure from normal tax treatment, that owners of businesses that normally are not considered employees, or either through a sole proprietorship or an LLC type arrangement, for purposes of the program, they're going to be included as employees, so they will be includable in your payroll costs, again up to the $100,000 cap. So it's all compensation that is paid to those individuals. It includes paid leave, severance payments. It includes payment for group health benefits. So that's anything that you make to the employee or on their behalf if you have a self-insured arrangement. Notice that this is also included as a whole separate category on its own of group health care benefits. It also includes retirement benefits and payment of state and local payroll taxes. This comment, this is before we needed to update the slide on the self-employed owners. They are now included for payroll costs, so you will be able to include them in your payroll costs. Other things that you can use the money on include mortgage interest. Those obligations have to be in place by February 15th. So if you have a new mortgage, you won't be able to use it. Other insurance premiums like property and casualty insurance premiums, you can use the money, but you don't get forgiveness if you use it for that. Existing SBA uses, same as insurance premiums, you can use the money for that, but you would not receive forgiveness for it. Interest on other debt obligations, same rule, you can use it, but no forgiveness. Rent and utilities, you can use it and get forgiveness. For both of those, the underlying obligation had to be in place by February 15th. So when you go back and study this, this is the Bible in terms of applying, using, and getting forgiveness. But let's kind of step through the rest. So Zach, can we go to the next slide? So this is, from this point on, this is where we're going to get more guidance from the SBA. We have a pretty good sense of it, but there's going to be more granular questions in the weeds that we really need the guidance on. So as noted on the previous slide, you can get forgiveness to the extent within the first 8 weeks of your loan origination, which is going to be your funding date. You use 75% of the money on payroll costs, and you can use the rest on payment of interest on mortgage obligations, rent obligations, and leases, which includes equipment leases, and utility payments for specified services, which is mostly what you would think of as standard utilities. Phone, gas, electric, internet. As long as those latter obligations all were in place prior to February 15th. The goal here is to really incentivize quick deployment of the loan dollars to prioritize these buckets of expenses, particularly payroll. So this 75% usage requirement is a regulatory requirement. It's not included in the statute. So on both ends of the spectrum, politically, they're really focused on maximizing the use of these loan dollars to keep people employed and off of the unemployment rolls. Any dollar spent more than 8 weeks after your loan is originated will be excludable from the forgiveness eligible expenses, and so those would turn into a loan. What we don't know is if you use the loan for non-permitted expenses. So let's say you don't ever use it for 75, let's say you never use 75% of it for the payroll, what the penalty will be. It's likely to be something beyond just converting it to the loan to which you've agreed. You would be out of sync with the loan covenants. And we're waiting for guidance on that. Our strong guidance here is that do everything you can to use the money within the permissible purposes under the program. Reductions in forgiveness amounts. So on this, maximum forgiveness amounts will be reduced proportionately to the extent that your pre-crisis FTEs are less than your post-crisis FTEs. If you eliminated payroll during the if you eliminated payroll already, you have a catch-up opportunity. As long as the FTEs are restored by June 30th. This is where we're waiting for some details in terms of how that will work, how long you have to employ them and things like that. And it's one of the biggest open questions in the program overall. But this is going to be where opportunities are made if you've had or are currently making any cuts. We don't know, there's nothing in the statute that requires you to maintain that payroll after the forgiveness period. It's something else we expect to see addressed in that guidance that gets issued on the 26th. Let's talk a little bit about applying for forgiveness. Here's where we know certain things, but we expect to see more. So we know that you're going to have to submit some verification of your FTEs on payroll and their pay rates. Something else I glossed over, but that's important. You're not allowed to reduce the compensation of any individual employee by more than 25%. That rule appears to only apply to individuals who make less than $100,000. If individuals make more than that pre-crisis, we think you can cut their compensation with impunity. You can cut it as much as you want. The biggest question we get asked is, well, what happens if we've lost employees and they won't come back, either because they've made other commitments or because the unemployment benefit is now better for them than the employment benefit? And the answer is you don't have to employ any particular employees. You have to sort of satisfy the FTE numbers and the overall payroll expense numbers. But there is concern that you will not be able to replace people. We have asked the SBA for some latitude there if you're making good faith efforts to employ your full number of FTEs, and we're waiting for guidance on that as well. But you're going to have to document everything. Right now, we're encouraging you to maintain all your documentation that would demonstrate your use of the proceeds for these receipts. Can we go to the next slide, please? So interaction with the tax benefits. You're making a choice here. Under the CARES Act, there are two tax benefits that they implemented, and I want to go through those and sort of explain what the alternatives are, and you'll be balancing the Paycheck Protection Program loans with these and sort of deciding which one you prefer. So the first one you give up if you are a recipient of the loan, regardless of whether you get forgiveness or not. And that is that there's an employee retention credit that was created under the CARES Act. It allows you to take the first 50% of the first $10,000 in wages per employee, including the value of their health plan benefits that you pay. You qualify if one of two things are true. You've had at least a partial suspension of operations due to government orders, e.g. a lot of our state shutdown orders, or your year-over-year reduction in gross receipts for the quarter. This is all going to be evaluated on a quarterly basis, or at least 50%. If you have more than 100 employers, then the employee has to be at home and not working in order for you to qualify for the credit. I want to pause on this a minute. There's a couple of issues that are worth flagging. So first of all, this provision was written before the prevalence of the stay-at-home orders. We think that almost every business that's in a state that has the stay-at-home order should qualify for this if you've kept people home and you've seen that reduction. So most business will be able to qualify. In terms of that first $10,000 in wages per employee, you're going to evaluate that by quarter. It's $10,000 for the year, but if you paid somebody $8,000 in the first quarter and you're subject to one of these stay-at-home orders, then you'd be able to apply 50% to the $8,000, and you'd have $2,000 left to calculate the credit in the next quarter if you remain subject to the stay-at-home order and you've experienced at least a partial suspension of your operations because of that. So it's a nice benefit, and you'll be abandoning that if you instead take the loan. The next tax benefit you abandon only if you receive forgiveness. We believe it's any forgiveness, even partial. So for most of you, we hope that you'll qualify for at least substantial or all of the forgiveness. So you would be abandoning this, but you're allowed to postpone the date for paying your employer payroll taxes that you have not yet paid this year. And if you're self-employed, the self-employment taxes attributable wages all paid during 2020 to the next 2 years. So half of those obligations would be deferred until the end of 2021 and the other half to the end of 2022. There is no requirement that you have any distress to qualify for this benefit. It appears to be a benefit that's available to each and every business that's paying payroll taxes in America, which I think is every business. And so this is something you automatically qualify for unless you receive forgiveness under the program. So, looking at these two benefits and contrasting them with what's available through the loan program, it becomes a math issue for you to factor in as you're looking at your employment plans and how the crisis is affecting your overall business plans. So let's go to the last slide that we're going to cover, which is the next slide. This is just kind of the deadline. So, we're past all the deadlines. The rules are issued. The loans are available for small businesses and sole proprietorships. They just issued 2 days, which was several days after the April 10th kind of gate opening for independent contractors and self-employed individuals. And so the only date remaining is that April 26th date, where they have the requirement to issue guidance on deferral and the forgiveness. One thing I should note that I also glossed over is that when you're thinking about your businesses, you have to count 1099 recipients in your number for determining eligibility for your program, but they are excluded from your payroll costs unless they're an owner, and they don't receive 1099s anyway. And so they are supposed to apply for their own direct loans under the program, and you would not include them in your payroll costs, and they would not count in your payroll costs when you're looking at uses of the money. So with that, Tom, I'm going to turn it back to you.
Thank you, Scott. Thank you, Scott, and appreciate that abbreviated version. This has got to be one of the most fluid situations I can ever remember. This is one of the most fluid situations I can ever remember. I mean, it's changing every minute, if you will, and there's a lot going on. And I'm really thrilled to see how many attendees we've had. I'm even more thrilled to see how many questions we have. In the perfect world, we'd like to go through a Q&A right now, but I don't know how we would get our arms around over 70 some odd questions. And so what we're going to do, like we have alluded to before, is we are going to have another session with Scott and his colleague, Kate Jensen. And what we're going to do is formalize a lot of these Q&As. There's some that are repeat questions, such as the bank's lack of help, can I apply on my own, how to treat 1099 employees, and the such. And I think to use the best use of time and be more efficient, what we're going to do is, first of all, make sure that all the slides are available to all of you on the call. Second of all, we're going to organize these questions and answers for you so that we can streamline them and get answers to you. And we can do that hopefully in a written version, but most definitely in a version with Scott and Kate. And we'll announce that follow-up webinar very shortly once we get everybody's calendars coordinated. With that being said, Scott's got to run to another issue based on the fluidity of what's going on in the world. I just want to take a quick minute to thank Scott and all that they've done for us over the years at Steptoe. As most of you know, the NAIFA advocacy team is many moving parts. First of all, we have the internal part, which is led by Diane Boyle and her government relations team, and Judy Karza and so many other qualified individuals. And they fight for all of us on a daily basis on Capitol Hill. But on the outside, we also have some great outside counsel that works for us and advises us. And Scott's just one of those superb individuals that we're so grateful to have on our team. So I know there's a lot of people out there dying to get more information. We're going to get it to you. Trust me, we're just like you. I think sometimes people forget. I'm an independent advisor with an agency myself. I've got a bank loan and I got questions on. Many of the questions that you asked are the questions that I'm asking. And as Scott alluded to, there's a lot of stuff out there that the fine print still needs to be written or dried or one of the two. So with that being said, I want to thank everybody for being on the call. Over 1,000 attendees plus many group people on the call. Over 100 questions for us to get to you. Please be patient. We are here for you. NAIFA has your back, and we are going to keep this conversation going and produce all the answers that you need as quickly as humanly possible. Thank you to all of you for supporting NAIFA. And again, be safe and take care of everybody. Have a great day and a good week.